Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. Today is July 23rd, 2025. All right, today I've got a couple of rants. I've got a few rants, actually. I think I have three. Then we're going to get into some charts. But first, my first rant is that my partner, Kane Ireland, has been golfing all day while I've been sitting here in my 10 by 10 office, staring out the window at the beautiful weather, making sure that our clients get the best information possible. Well, he's out golfing with our clients and with friends. Here I am waiting for my invite. Must have got lost in the mail. All right, that's my first rant. Let's get into what is happening in the marketplace today. Canola was up $8.10 at $6.98.10. Minneapolis wheat up a cent at $6.09.5. Kansas wheat and Chicago wheat took a bit of a hit today, down 9.75 in Kansas, 523.5, down 9 in Chicago at 540.5, thereby strengthening the spread between Minneapolis and Chicago, which we've been seeing weakening in the last little bit. Soybeans are down 2.75 at 10.22 3/4. Soybean oil was up about half a penny today at 55.8 cents. Corn down 3/4 cent at 3.98.5. Still can't break back above the $4 on the September there. The Canadian dollar has been climbing recently, 73.5 cents today, up about 2 points today. Cattle, both live and feeder, made new highs today. Cattle up 237 to 223.5, and feeder cattle are up to 331.52. That's up 3.25 from yesterday. All right, first rant. I'm going to rant a little bit here about a large corporation in the U.S. named Cal-Maine Foods. Today, or overnight, last night, they released their quarterly earnings, which resulted in them stating that higher egg prices lifted the results for Cal-Maine Foods. Shares hit a record price. Now, I'm going to show a chart here just to kind of show just how structurally interesting this chart is. Here is the price action that happened today as a result. Large gap, it was trading right around 105 a share. It gapped higher initially all the way up to above $125 a share, backed off a little bit. We closed at 119 a share. This was a big miss. They surprised the market to the upside and by a large margin. What's really interesting here is when you look at the longer term chart. This is a longer term chart of Cal-Maine Foods. This is a weekly chart. The avian flu hasn't it has hit the marketplace before. It has affected Cal-Maine's price before. You would think that this type of record profits or this type of reduction in the bird population because of avian flu would negatively affect a business. But in fact, these types of things positively affect Cal-Maine Foods and some of other participants in the food industry. Here you can see the rally that occurred in 2022 and 2023 as a result of an avian flu outbreak. And then here is 2024. As you can see, we just skyrocketed to record values here early in 2025. And now, after this earnings report, it skyrocketed up to 119, or at the close 119. Again, it traded as high as or over 125, $125 a share. Now, this is what their quarterly statement looks like. I'm not going to put you through all of that. In fact, I printed out what I call the highlights. So I'll read some of these to you. Outbreaks of avian flu have continued to occur in the United States poultry flocks. In calendar 2024, 38.4 million commercial layer hens and 1.8 million pullets were depopulated due to avian flu. Approximately 13.6 million commercial laying hens and 500,000 pullets were depopulated in December alone. So that's facts, I guess. Goes on to say, without question, we have recently faced significant challenges within our company and the entire egg industry due to the ongoing outbreaks of avian flu. Do those prices seem like they are experiencing challenges? It does not. It does not appear, the earnings does not appear that they are experiencing challenges. While we recognize, it goes on, while we recognize and address these risks, we are steadfast in our efforts to effectively manage our operations and promote responsible and sustainable production. We remain focused on optimizing aspects, yada, yada, yada. Yeah. So let's get to the brass tacks here as far as profitability goes. For the second quarter of fiscal 2025, let's see. Cal-Maine Foods will pay a cash dividend of approximately $1.49 per share to holders of its common stock and Class A common stock. Now, I did some math. That means that they are going to pay out $72 million in profits to their shareholders. That's a nice windfall if you are a shareholder in Cal-Maine. But just to juxtapose, I looked up their last July release, and last year they paid out a little over $37 million in the same kinds of dividends. Their dividends are variable, but so year over year, they basically doubled the amount of dividends that they paid out in a time when American consumers were not able to afford eggs because they were that expensive. Restaurants were exiting eggs because they were too unaffordable. And this isn't necessarily because there was none available. The number of eggs did not drop to a level that warranted panic in the marketplace. What happened was these companies like Cal-Maine adjusted their prices so high, with this being an excuse, with the avian flu being an excuse, that their profits tripled. Okay, that just drives me crazy. So I don't know. I think there's lots of that going on in the marketplace today. I think that companies are using inflation as an excuse to raise prices, all of that kind of stuff. And it just is frustrating a lot of the time. All right, let's get back to it here. My third rant is about AI and AI-driven content. Now, as a researcher, as an analyst, obviously we use the internet a lot to chrome around and find tidbits of information and pull data and all of that kind of stuff from various websites. What I'm seeing is that there's significantly more content being created now with AI. Specifically, I find this, not specifically, but there is a lot of it being dumped onto the marketplace when it comes to ag market information. Today, when I was doing some research, particularly on wheat and on Russian production of wheat, I noticed that there was an article that was written about Russia's recent reduction in production that was wrong. The numbers were absolutely wrong. They weren't even reported in the same metric that others report in. And the number was wrong. And there was an author, I'm not going to call out this author. There was a byline on this article, and an author, his picture and everything was on there. But it was absolutely an AI driven article, and it was incorrect. And I think instead of fact checking it, this particular author decided to publish it anyway. So that's my third rant. And I'm just going to go on here to say, if you want good information that isn't AI driven, we do create that. Okay, so if you want to get our premium content, our premium reports, it's only $99 a month. Go to our website here. You can get to it by going to CanadianAgMarkets.com or IrelandComoLafoy.com, although I believe the former is probably easier for you to remember. Click over here to our subscribe page, and it will take you here. Then, only $99 a month. You can cancel anytime if you want. You can subscribe here, and that will take you to the payment page, which looks like this. Again, $99 a month, simple, easy. You get non-AI generated content for your viewing pleasure. Also, you should subscribe to this YouTube channel. Hit that subscribe button on this YouTube channel to get all of these videos updated. We really enjoy making these. So, okay. On to some charts that we find interesting today. Here is November canola today. We did see a bit of a gains in this market today. It still hasn't been able to clear the 20-day moving average or close above the 20-day moving average in this recent rally. Obviously it's also kind of bumping up against this trend line resistance. This channel looks like it's still in place. overall, like even the brokers that I speak with, they're still a little bit tepid on creating or treating this as a continued bullish outlook. I think there's more people that are skewed to the bearish side, particularly because this is a seasonal time when we see prices fall. We are about to get a new crop flush of grain or of canola into the system, so there still is some risks here. It is still trading relatively high in the box, though. We still, every once in a while we see prices pop up above $700. Those could be good hedging opportunities. So this market's still delivering some opportunity, but it does look like it's slowly fading south. Minneapolis wheat today. We put out a video yesterday about Minneapolis wheat and whether it had bottomed. So again, um, go look back on this YouTube channel. It was just published yesterday. It is kind of still bumping up against this support here. It did reach down to 607. This support here is 605. I don't know how many times I've used that number in the past little while in relation to Minneapolis wheat, but I think it's significant. I think, even trade anywhere north of six. Once you start getting Minneapolis wheat into the fives, it does get it does beg the question as to whether or not it should be or could be any cheaper. All right, moving on to soybeans. Soybeans look a little bit concerning here. As you can see, we've been making some lower highs over the last few weeks. This recent rally here in mid-July also produced a lower high. It's now fading back down again, which raises the question of whether it will create or make a new low as it pushes lower. The $10 mark-ish is what we're watching now. And of course, this 972 or whatever this was here that it traded down to is also a support level. So overall, although inside a pretty wide channel, the beans still look a little bit pressured here at this point after making a test of resistance on Friday. Here's the live cattle markets. We'll end on cattle here. Again, I just don't know how to say that this market continues higher. We still believe that there's probably going to be a volatile correction in this market at some point when this decides to top out. Yes, there is fundamentals that are supporting this, particularly small cattle herds, etc. But this market continues to make new highs, both in the feeder side and in the live cattle or the fats. Today, actually, we saw a bit of a dichotomy in feeder. It was down, it was red, while live cattle were up, but it finished the day off pretty strong. All right, that is all that we have for you today. Thank you for joining us. We will see you again tomorrow.